This is the DOME, the depth of market from today's trade. Today is 8 May 2023. And the DOME is not what you guys think it is. It is not rocket science. It's a log of product transactional interest at what price and what volume occurred. This over here on the right side that I'm scribbling is the DOME. This is a real trade example, and this is what I do every day. I track product inventory. That's what a stock is. That's what a S&P 500 contract is. That's what an option is. It's like a used car or a new car or a head of cattle. It's an item of inventory. And when you track items of inventory on a methodology like this, you can tend to see where the big buyers and the big sellers are, because that's how you track an auction. When I was 4 years old, and I still remember this, my grandpa took me to a cattle auction, and I remember him saying something to the extent of, "Watch that guy over there," and it was just some guy in a cowboy hat, um, kind of fat too, talking early 1970s, and I couldn't understand what was going on at the time, because I was at this auction, but my grandpa said, "Watch that guy," and we did. And when that guy bought at the cattle auction, my grandpa went ahead and bought his couple. He was only buying a couple, two or three head of cattle. Here I am at 53 years old. That's 49 years ago. My grandpa's long since passed away, but it's the same exact thing. Look for where the big buyers or the big sellers are. Nobody goes to a cattle auction. Well, they do. There are buyers and sellers at a cattle auction. This, to me, is nothing more than a cattle auction. I'm looking more of the inventory of cattle, except in this case, it's S&P 500 contract. You can do this with stocks as well, but stocks aren't as transparent as the CME, the futures exchange. I can see every single transaction that occurs. That's why it's a centralized exchange. The stock market is honest. It's just not a centralized exchange. You got a New York exchange. You got London. You got the San Francisco, the Boston, the Philadelphia. You got Miami. You got a lot of exchanges. Right here, you have one. You can track them all right here. This is an auction. That's where everybody that might be watching this goes wrong when they trade stocks. They see a chart and it goes up and it goes down. It goes this way and it does some like this. And they're like, "Oh, I got it. Ooh, yeah, I should short here because I should do." You guys do not know what you're talking about. This means nothing. This is a candlestick, and people there's millions, cajillions of hours based on what these things are and how they work. This is just a price tracker. It's from Japan. It's a Japanese way of taking price. It has nothing to do with product sales between the buyers and sellers other than it denotates the price. And every single indicator that's out there does the same thing. It's just a derivative of the price. There's no indicators on my chart. I'm just reading the auction. The big cattle guy comes in here. Okay. There's an auctioneer right here, or sorry, an auction participant, and he bought 15,000 something. That's 15.8 or 9. I can't quite read it. Contracts, the heads of cattle. And why else would he buy them? So he could sell them at a higher price. He's not buying them so he could sell at a lower price. That's why you watch this guy. So, except in the stock market, we got a little trick. This price increased, and this guy wants to find other buyers in here to keep driving the price up so that he can sell his inventory to them. He wants to sell it up here. But here's the problem. He gets up here in the pricing and he can't find any buyers. That's why this thing is like this, like a dagger to the sky. It gets narrower and narrow and it peters out right about here. All right. It gets thinner right here at 922 contracts and 1282. So I had to watch this for a couple hours. I watched this guy develop. And I'm like, okay, let's see what the big cattleman's doing. Right. And then this price came up and it came down, and people are making trades and they're trying to make predictions and all this garbage on the market. Like, what are you guys doing? All you got to do is identify the big dude go up, wait for the counter trade, which is what that is. Those are big sellers right there. In fact, I know they are because of price reaction. So, and their sell markets into the bid. Um, but if you take this 102 from this six figure under here, that's like 20 times imbalance. This 23 to this 87 is a 4-to-1 imbalance. 106 to 82 is a 1.5 or something. That's not quite as strong. And look at the next imbalance, it's 50 to 1. This is where I shorted. I'm watching. Okay, I watched for this guy. He can't find any sellers, so the sellers are going to take over. That's what they did right here. They took over. They watched him. They watched this guy, and guess what? Now the hunter is the hunted. Okay, because he has inventory in there. He can't unload without spooking more sellers here. Okay. So he has inventory. He's going to get stopped out. So what we're doing is targeting him. I wait for a potential target, wait for the sellers to step in, short with them as soon as they're back into the premium auction zone, meaning uh, fair value, which is what fair price is, fair value, fair price, the value area. It's called, traders call this the value area high. Screw trying to read a pricing. I can't read that stuff, man. Jesus, look at the numbers. These guys are out here. This is a trading no zone up here. You don't trade here. You wait until you're in the auction zone, and I have a definitive trap and I have a definitive large seller. And then when the price comes down to this guy right here, and I see lots of sellers. These are the sharks, man. They're lining up. They're getting ready to chomp this big fish right here because he's gonna eat it. So I jump on board as well. So I go minus. I did a -1 contract and I did a -3 right here because I'm looking for a run to discount, which in today's case was at 41.35. I'd have to look back at the chart. 15, 17 points below this. And it went within a few ticks of that, whatever that price was. And I just pulled off because there was blood in the water. Dude, that's why this is red. It's blood in the water. The sharks are coming, man. They're going to go after this dude. So all this crap, I spent so many years like, oh, this means this. And you got these lines and you got crossing lines and then you got dots and colors and shit like that. No, it's an auction. You should know that from page 1 of how do you trade the market. It's an auction, okay? This is how you trade an auction. Let me see if this other thing comes up on the recording. This is what the live depth of market looks like. It's very slow because it's nighttime here. It's after 6 Central Time. And this is the Globex. But what this says, since I had just turned it on, okay, it says, give me a second. It says, let's start from left to right. Pulls and sells, pulls and stacking. It says 13 people added to the bid or 18 people. Take that sort of as a block. Right there, that's about 30 contracts. There's another 30 got filled right there. Down here says 22 people pulled off the bid. Okay. Over here are the no kidding current resting orders. Okay. There's 22 buyers. In order for price to come down to this level, somebody has to sell market into that, basically into those available. So what happened right there? It jumped up. So somebody bought market into the available contracts that were right here in order for the price to go back here. And actually, in order for the price to go here, these 56 contracts right here, now it's 55. Somebody has to hit buy market. Let's see if it does it. Or somebody has to hit sell market. Somebody hits sell market, or they hit limit sale right there. They hit the bid without a price movement. That was either like a transaction at the bid. You can disregard that if the price doesn't move. Boom. Let's look and see. This is recent sells and recent buys. I'm doing this at this speed so you can read it because it's on the New York hours. This thing is 185 miles an hour. It is a racing machine, and the best is only this is survival of the fittest, man. Best survive, and everyone else dies. This is a competition for money. Okay, so somebody that was a transaction for 28 buys right there. This 8 has to be eaten up in order for that price to jump up there. There it goes. So the 8 was eaten up. Somebody bought 49. Somebody sold 26 into the market. And that's how that works. And now you can do comparisons between these for imbalances. I look for numbers 3 to 1 or better. So I would look for like a 90 here against the 30 in order to go long. Right now, this doesn't tell me anything. All right. So I covered this column, this column, this column. Current CLS is current last size. There's the sell column, pulled and stack on the offer side. On this is titled sellers and buyers. All this information is here is all this stuff logged in a historical histogram. What do you call it? A bell curvy histogram thing. So this thing will form up like this, and you can see the buyers and sellers quite clearly. Right now, at this level right here, we have balance. Okay, that in from this picture that I'm looking at right here, this is the peak of the bell curve. That's your fair price. Okay. Now, fair price is up here on this one because it has a longer look back than what I'm looking at. I'm just looking at this right here going, okay, right now fair price is right here. But for a more longer picture, fair price is right here. These are transactions that are occurring. So these numbers that occur, they get logged over here. Okay. That, and then these numbers in sum get logged over here. That's how that works. And I can see imbalances when that happens. This is why nobody can tell you which way the market is because they can't tell you the intention of the buyers or the sellers. All they can do is look at the buyers and the sellers. Are people buying? Are people selling? And this is how you empirically tell that. This is an auction again. Right now we're at discount, by the way. So that's a shorty on the Dom, dude. You have to learn to read this because this nonsense about candles is complete blither. It doesn't make any sense. This is an auction. Follow the big buyers, follow the big sellers. Know that it's a big boys game. All right. Today's trade made me a little north of $2,000. I do that quite regularly because I'm just watching. I'm doing that thing that I did at 4 years old when my short grandpa, rest his soul, he said, "Keep your eye on that guy over there." And every time I think of that, I think of a guy in a cowboy. I think he was smoking too, because the place stunk. It smelled like cow crap and cigarettes and tobacco. Oh, my grandpa chewed that crap. And they just spit this stuff everywhere. Got shit kickers on their boots and everything. But it's the same principle. It's a cattle auction. You keep your eye on that guy over there. All right. My name's Fred Atwater. I've been trading for 15 years. If you have questions, reach out. I'm not sharing something that is a secret. The information is right in front of you. You just need somebody to show you what you're to put it in context for you. To go, no, dude, it's an auction. All right. See ya.